The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, or good evening, wherever you are in the world today. My name is Steve Sprague. I'll be your moderator as well as a presenter for today's session, Shared Services in Latin America, Best Practices and Solution Options. I'm pleased to be joined by our partner and experts in electronic invoicing around the globe, but specifically in the accounts payable processes, Catherine Liao, Head of Pre-Sales at Tradeshift. A little bit of housekeeping for today's session. We will be utilizing the GoToWebinar toolset. There is an option for you to enter questions within your viewer. Please feel free at any point in time during the session to enter those questions, and we'll address it at the end through a Q&A component, hopefully lasting about 10 to 15 minutes. If we don't get to your questions, we will get to those through email in the next 24 to 36 hours. Additionally, we'll make the presentation available both on demand as well as in physical format for those of you who do want it. So without further ado, we have a lot of information to cover. There's been a lot going on really over the past 5 weeks in Latin America, specifically Brazil and Mexico. From an agenda perspective, what we wanted to cover today is really what is the landscape in Latin America. It really is by far the most complex and unique electronic invoicing in the world. For example, Brazil does more electronic invoices than the majority of countries in Europe combined on an annual basis. Mexico is quickly approaching that. We'll talk a little bit about some of the recent announcements in electronic invoicing legislation, both in Mexico, which was announced May 31st, and Brazil, actually yesterday, here just announced a brand new change, one of the largest changes in Brazil, version 3.1, really the largest change to Nota Fiscal since 2.0 was released in 2010. And so we'll talk a little bit about some of the things we're seeing there. But that mandate in Brazil will be March of 2014. So companies need to get prepared. And if you are running or working with a Brazilian operation, the new technical notes are released on the SAFA's website as of yesterday. We'll talk about the common challenges from a shared services perspective. And then I also want to talk in detail about the Invoiceware and Tradeshift partnership and what we bring from a Latin America shared service offering jointly, as well as what Tradeshift brings globally. They are a global provider. I think it's important to understand that we've taken a different tactic at approaching electronic invoicing. On our side, partly driven by the government mandates and really lessons learned from many failed implementations with legacy-type providers in the invoicing. Tradeshift has a newer approach to this, and one that we think is the correct way to go. And again, we'll leave it open for Q&A at the end. So a little bit about us, for those that aren't familiar. Invoiceware International focuses solely on Latin American electronic invoicing compliance. We work primarily with multinational companies that have operations in multiple countries. Brazil, Mexico, Argentina, and Chile are by far the most prominent electronic invoicing countries in Latin America. And we focus on really simplifying how organizations need to deal with the constant chaos down there, both from accounts receivable perspective, so outbound billing to your customers, as well as the inbound requirements. We are a global organization focused on enterprise support. We're a phone call away in English, Spanish, or Portuguese. We have local operations in both Brazil and in Mexico to manage the local Portuguese and Spanish. And we focus on end-to-end support, including some fairly unique things from an ERP perspective. We realize that many of the ERP systems, especially on the outbound e-billing environment, AR side of the house, SAP, Oracle, have weaknesses there. And so we have some unique solutions to help simplify the gaps that are seen in some of the major ERP systems. I think the most important thing, and what we realized a long time ago, is that change management is required. You see 5 to 6 changes, minor changes per year in countries like Brazil, and then you get these massive changes, such as CFDI mandates in Mexico and this 3.1 release in Brazil. And we include all of that, not only the software, but also the consulting services. So you're never going to get another SOW from us to keep the system upgraded and maintained, versus many of the providers out there that either offer an on-premise software solution or really they just keep billing and billing and billing. Our view is to take this headache of constant chaos off your plate. So let's look at Latin America. I think it's important to understand the basic differences in level set, kind of some terminology when we look at electronic invoicing in Latin America. And there are really, I would say, two types of countries in Latin America. There's the mandated electronic invoicing and then the expanding countries. If you are doing business in Brazil, Mexico, and Argentina, you should be doing electronic invoicing today. It is required. Your supplier should be sending you electronic invoicing. It is required. 99+%, if not 100% of invoices will be primarily on this. So Brazil, Mexico, and Argentina are the mandated countries. Chile is almost there. They're what I would call a prescribed country from an expansion perspective. They have documented how electronic invoices will be done. If you do AR, you must also do AP. If you do AP, same thing, vice versa. You must also do AR. But you don't have to go to electronic invoicing. You can maintain paper. And then you have other up-and-coming countries through the CIAT organization of Latin American governments that are really starting to learn the benefits from a government tax leakage perspective and are starting to implement some of the previous versions of what Mexico did in 2008, what Brazil was doing in 2007. And you see that in Guatemala. There are rumblings in Colombia, which we would consider another large market, on mandating electronic invoicing even though they had the date. So when you look at it, you have to separate it between the two types of countries. You also have to separate it between domestic and cross-border invoices. When we talk about electronic invoice mandates, this is in-country. So in Brazil, it's CNPJ, what they call their tax ID, to another CNPJ. So if you're selling to or purchasing from, then the domestic nota fiscal requirements in Brazil would apply. Cross-border, if you were getting billed from the U.S. operation into Brazil, it'd be a different set of circumstances. Those nota fiscal requirements would not be utilized. Same thing if Argentina was to bill Brazil. Also, again, these mandates are constantly evolving. You know, I read an interesting article on tax compliance the other day, and it was one of the big three tax consultancies, and they said, you know, on average, a multinational corporation will spend about 80 hours a year dealing with a country like the U.S. or one of the European countries. In Brazil, it's 2,600 hours. So just to show you the types of complexity that these tax laws have and can create for electronic invoicing, I think that's a pretty good statistic there. Because of, if we focus on Brazil, Mexico, and Chile, because the government has really taken over the standardization, it wasn't driven by a large buyer, it was driven by the local tax authority, there are some eliminations of some common roadblocks. And if I talk about in-country domestic, cross-border, still similar issues as in Europe, but in-country domestic, these mandates have really eliminated paper. They force the supplier to make the XML available to you as a buyer, so the supplier has to send it. Interestingly enough, in countries like Brazil and Mexico, email has been a common distribution theme, where a company might have a nfe@companyaa.br email address, and they utilize that to collect invoices from their supplier. There really aren't multiple formats of the invoice. I would say the exception to this is Mexico with an addenda, and I'll talk about that in a second, but you don't have 100 different formats. It's the XML from the government is what they care about. Accuracy and timing have also been really improved because in Brazil, Mexico, and Chile, that invoice and a copy of that needs to go along with the truck for shipping. So technically, you can't ship until your invoice is approved in a printed format with a barcode goes on the truck. So it's really improved the accuracy of what's going to a company, what the values are with a company, because they don't want to deal with the reconciliation and credit and debit note type processes. Also, when you look at things like supply chain finance and opportunities in countries like Brazil and Mexico, the mandated e-invoice and the mandated that supplier shall send it to me has really given you the opportunity to do the three-way matching really immediately, many times even before the goods arrive. And so you can really accelerate straight-through processing, and I think there's a lot of valuable opportunity for things like supply chain finance. When you approach Latin America, you need to look at it from two different angles. The first is the government compliance. This is what you have to do, and I call this step the okay to deduct. All right? If you are a buyer of goods from a domestic supplier and you want to subtract the VAT that you're paying your supplier from what you're charging your customer, so you pay your remittance to the government on the net, standard VAT process, you need to validate these invoices. Because if you were to get audited, then there are some pretty substantial fines within these countries. And so what the government makes you do is what we call okay to deduct. And what you can do, though, and where we see companies going now, is really focused on what I would call the okay to pay scenario. And this is one of the things we'd work with Tradeshift on, is this concept of taking that invoice and really looking at it from, is this okay to pay? I've got this XML, right? What can I do with it now? Well, you can bounce it up against the purchase order. You can utilize the PDF representation on the truck to drive the goods receipt process and then drive your three-way match. There's a lot of straight-through processing value that I think companies are not looking at in Latin America from a shared service perspective. So there's what you have to do, and then there's what you should be doing, because the government made this possible. It's not just all negatives. The other area of what you can be doing is really working capital optimization, more of a treasury type issue. But there's a lot of opportunity because, again, that invoice tends to be more accurate. It can come even before the goods arrive. It allows you to interact off of it, archive. You have the PDF on the truck to really advance your ability to do goods receipt. And so there's a lot of working capital optimization. It's kind of like step A, step B, and step C. Those that are really advanced, we see looking at working capital optimization once they get the Latin American process moving forward. So let's talk about some of the compliance issues. What do you need to be concerned about? Well, Brazil and Mexico are the primary ones. And they also tend to be the primary amounts of revenue as well as spend for a multinational. The big thing in Mexico that happened is the repeal of CFD. 90% of invoices in Mexico were on a batch legacy process known as CFD. They have moved now to a real-time CFDI process. Those familiar with Nota Fiscal in Brazil, it's very similar. It's the supplier needs to have the invoice approved, the invoice must go with the truck, etc. So if you're not CFDI on the accounts receivable side, this is a pretty big change. And it's not an easy change because it's a process. It's not a little XML mapping. And it also affects your ability to ship to your end customer, so therefore your ability to collect, your DSO. On the payable side, the one thing I want to mention here as a takeaway is I think it's overlooked by a lot of companies that if 90% of my invoices from my suppliers are switching to a new format, what's the likelihood that those suppliers over the next 6 to 18 months will have an error? We found in some initial CFDI transitions as many as 15% of inbound supplier invoices would fail government validation. Could be something simple like a timestamp was off, or the seals didn't match, or the tax ID of the signature didn't match the tax ID of the sender. These things all make invoices unable to be deducted. They're invalid if you ever got audited. And so it's not something that will show up immediately, but it can really affect you over the next few years. So as the AP team, if you're doing a lot of inbound volume, it's something that you really need to take a look at. It is overlooked because it's just not documented out there. I won't go through the whole Mexico process here, but I think the keys to understand is your suppliers now more and more will be moving to CFDI, more of a real-time process whereby that XML invoice must be approved, the government attributes must be sent back, posted to your supplier's ERP system. There needs to be a printout that goes with the truck. As the buyer, you need to be validating the step 6. You need to be validating all the XML you receive to ensure that it is a legitimate invoice, because that's what you're going to use to drive your tax deductions on your VAT, your remittances. And so that's important there. And so it's both a big change. There's about 500,000 companies on the outbound that are affected that will need to change, which is going to affect every local buyer. But again, it's in-country domestic is what CFDI is. If you're doing something like maquiladora, where you're doing the free trade manufacturing, U.S. to Mexico, this doesn't count. If you're receiving invoices from the U.S. into a Mexico entity, purchased from a U.S. entity, CFDI would not apply. You're actually going to get quite a bit of paper still on that process. Brazil. This is by far the most complicated. And again, we're actually going to hold another seminar here in a couple weeks around 3.1 and the changes. But the mandates will be March 2014 for the transition to this new mandate. I think from a services perspective, the AR side is similar. You have to have the invoice approved before you can send your goods. A couple things to take note here that are different. Well, Mexico does not distinguish between services and goods. Brazil does. Goods are done at the state level. There's 21 states, so there's 21 different web services. Service invoices are done at the city level. So that creates a whole nother level of difficulty. There's 5,000 cities, 5,000 plus cities in Brazil. Majority of business is done in 125 or less when you really look at it from a services perspective, but you have to integrate with the cities. And so that brings on a different play. Additionally, if you're paying freight payables, transportation, you'll have what's called a CTE, which is what the 3PLs have to send to the government. So as a supplier, you will have goods invoices at the state, service invoices at the city. As a buyer, this creates a lot of complexity. You will have your supplier sending you XML for goods. Those need to be validated and sent back. You have the whole issue with getting invoices from the city level. Some are automated, some are paper-only portal environments at the city level, so you need to understand your city allocation and where you're purchasing services from. You also need to be able to do CTE. All three of these invoices need to be validated, and you actually go a step further in Brazil because you have reporting. They call it SPED, which is their financial reports. And so 3 types of invoices from an accounts payable perspective all need to be fed into your monthly and annual SPED reports. This step 7, reception of goods confirmation, was really new and is currently being rolled out in the oil and gas industry, and we call this concept of Ventos. There have been some pretty big process changes in December of last year. More will come with new 3.1, but basically the concept of Ventos is this confirmation. What happened in Brazil is that you had suppliers illegally transporting goods utilizing the tax ID of a pretty big company. And so the first of Ventos is really this confirmation of awareness. The SAFAs wants you to tell them whether you are aware of a nota fiscal that's been registered under your tax ID by a supplier or not aware. And they use that not aware to go shut down those illegal suppliers. It goes a step further because they want to eliminate black market goods. And so when the goods arrive, based on that nota fiscal, you have to tell the government, yep, I ordered 100 widgets, the nota fiscal is 100 widgets, I received it into my warehouse fully. Or I only received 80 of the widgets and 20 were damaged in transit, so I sent them back because they're trying to eliminate black market goods after the point of delivery. And so this Ventos concept will continue to expand industries, and it's something to look at. For those of you that might be in Europe that are familiar with EMCS, the Excise Movement and Control Systems for alcohol and tobacco and energy, it's a similar kind of orchestration process where there's multiple messages, multiple child messages linked to a parent message. And so it's a complex process of cancellations, et cetera. And so in Brazil, it's all about 3.1, and it's all about understanding how, from an AP perspective, these confirmation messages, these Ventos, will roll into your industry or be required by maybe one of your customers. The other thing that's coming into play in Brazil is more of a retail move with what they call NFC, which is nota fiscal for consumers. And I'll talk more about that in some different sessions because it's a very specific retail supply chain issue. But that's another change that's coming. So common challenges for a multinational. You know, when you look at the complexity of Brazil, Mexico, Argentina, and Chile for the most part, and then look at the other countries that are there, we see a lot of shared service centers popping up in Costa Rica, a lot in Miami. What are the problems that are common across the board when we talk to customers? Well, the first is multiple local vendors. Whether a multinational grew through acquisitions, or whether they opened up different offices and just started with a smaller accounting package, you tend to have different e-invoicing providers in each country. That combined with the complexity and the constant change of the legislation creates a massive level of support, especially when you look at centralization of ERP systems, and especially when you look at a shared service, looking at best practices and consolidation, whether that's AR or AP. This multiple vendor component has huge costs, not just hardware or integration, but it's more change management, testing, affects your IT team, affects finance, affects logistics. So understand really what the cost is of how you're supporting Latin America. The confusion of domestic and cross-border. Domestic will be electronic mandates, but cross-border in many of the other countries outside of Brazil, Chile, Argentina, and Mexico are still paper, predominantly paper. So you need a solution that's going to deal with the local requirements, but also handle the cross-border paper. Another common issue you'll hear on the phone, the VAT and the tax remittance. You can only deduct the VAT on a supplier invoice if it's government valid. You don't want to get caught in a situation where you've been taking large deductions on large invoices off of invalid XML. When you're audited, it'll be very, very significant fines. Additionally, the concept of coordinating a credit and a debit. So for example, in Chile and Brazil, if you receive the goods and you end up doing the tax calculation on the invoice sent from the supplier and the taxes are wrong, you need to post the wrong taxes in your system, and you need to get a credit or debit note filed with the government to adjust it. You can't just change it, and it no longer becomes a cancellation at the supplier side. So you need this correspondence on the credit and debit. You hear this a lot from controllers and local AP staff of, how do I manage this inbound receiving and accounts payable process? Another thing we see, PO usage is still low. It's on the rise compared to other areas. And also companies are looking at straight-through processing. They want the ability to add data to it. This is more of a Mexico issue. You also see the issue of getting the supplier to send the PO, even though the field is in the notification. But a lot of companies are looking at, again, this okay to pay. And then finally, supplier collaboration. You never saw in Latin America the big takeoff of the procurement networks. They never really made a move there. And so you have a lot of questions we see in RFPs around onboarding, around payment status, PO append, dispute management, and more often supply chain finance. And so those are the common challenges that we see. What we have done with Tradeshift for the region is really looked at all of that and created a regional Latin American shared service platform, solving all of these issues. So the platform's comprehensive. It supports all the electronic mandates within the countries. It supports the in-country and cross-border paper. Catherine will talk about Cloud Scan and why we feel that is a very unique and needed way of doing paper invoices within Latin America. No one else in the world does this, and it's one of the reasons we partnered, just that innovation of Tradeshift there. No supplier fees to inhibit adoption. Asking someone to pay a % of spend on $1 million invoice to send an invoice, it's a $10,000 stamp, or €1 an invoice or €2 an invoice, what we've seen in European models, just doesn't make sense in the Latin American model because the government's making your supplier do all of this anyway. What are you charging them for unless there's ability to grow business? And so we see a lot of reluctancy on the supplier fees. And so we haven't included those. There are no supplier fees to get on board. Supplier enablement, onboarding, master data collection is important. And also in Brazil, for example, they have some very unique components called fiducies for supply chain finance. And so there's a lot of opportunity in these countries because of the XML to do that, so we have offerings there. The regional compliance, again, multi-country support. The big four, which tend to worry most companies, it's complete in Brazil for goods. We're one of the few companies that focuses on the city for services. CTE is that transportation invoice. Mexico, we fully understand all the acronyms you'll hear there, the legacy CFD. You'll still have very, very small companies on CBB, which is the barcode version, but the company's 250,000 pesos or less now in the new law. It's approximately $20,000. The Argentina requirements, and we guarantee the compliance that once you're on the system and these government changes come, we'll update the system. You're not going to get another statement of work for it. It's part of the service. And then also this automation and workflow, really how we look at it from matching the purchase order, dealing with the goods receipt. Catherine will talk about the business firewall and why that's important. We have some unique inbound receiving solutions for dealing with SAP. You'll hear terminology called Miro Amigo. We have some very unique solutions there as well, offered in conjunction with the platform. On the Oracle side, in Brazil, you'll hear integrated receiving. We know how to work with that. And then the last thing that I'll say is we've also looked at data append, which is additional information that a company may want a supplier to send. You see this more often in Mexico because Mexico has two components, a PO or a comprobante, which is the government invoice, and an addenda, which is what like a Walmart would want. And that might be PO number, lot information, pallet information, shipping information. And so we see a lot of movement around this concept of data append in the portal, especially with some of the longer tail suppliers. And so it is the most comprehensive Latin American shared service platform. It affects all of the issues. And now what I'd like to do is turn it over to Catherine to really talk about the Tradeshift solution as a whole and really what they do, because it really is unique in the world. And so Catherine, I'd like to turn the presentation over to you.
Absolutely. Thank you very much, Steve, and excellent overview so far. And as Steve had shared, Tradeshift is here to provide one single global platform to enable business transactions that occur between the buyers and the sellers to take place in a single centralized common interface. And first and foremost, there are no barriers to join. All companies can sign up and start sending business documents for free. And ultimately, what we've seen, that's been traditionally the single largest barrier to the adoption of sending electronic invoices, because ultimately, why traditional solutions have been taxing suppliers for conducting and carrying out a behavior that is desired. And then by bringing your suppliers onto a common platform, Tradeshift enables the buyers and sellers to interact and collaborate in real time, because as we know, as documents move back and forth between businesses, there are usually questions. So for example, have you received my invoices? Oh, I see that invoice is approved, but when can I expect payments? So historically, these type of collaboration will occur via a phone call, an email that are not trackable or auditable. And ultimately, what we at Tradeshift, this is something what we call collaboration in context, or that we can then, take the collaboration, tie it to a business document that is in question, and then have a historical log of all the collaborations that's gone on associated with the transaction. As a business-to-business platform, we have built from the ground up as an extensible ecosystem supporting various types of applications within the electronic invoice presentment and payment processes. So for example, our partners include the likes of PayPal, Intuit, Invoiceware, and a number of others, where that we can support the ability for suppliers to send invoices directly from their accounting applications, whether that is QuickBooks or Sage. We have the ability to authenticate and tie digital signature to an invoice where required by specific countries, and so on and so forth. But also, because we have the ability to extend the transactions that occurs between a business through the form of apps, we give companies the ability to create and write apps specific to their business requirements, so that you no longer need to rely on an SAP or a third-party consultancy to come in and spend a lot of resources to develop new capabilities that's required by your business. You can do that yourselves with your IT department. And what our customers tend to do with Tradeshift are a few, we tend to see 4 key areas that we tend to help our customers with, starting with electronic invoicing and data capture. Then we have capabilities within workflow, because ultimately, as we see the growing adoption in straight-through processing, there are still going to be exceptions that occur, because there may be times that to and through matching just fall outside the tolerances that's being specified. And when that happens, what's required is a workflow solution that really encourages collaboration that occurs between your organization as well as with your suppliers. Because ultimately, to resolve an invoice mismatch or an invoice exception, you may need to connect the business user who had purchased the goods, the people in the warehouse that has received the goods, and perhaps even the supplier who sent the goods to really come to a proper resolution in the fastest way possible. And as Steve had mentioned, we offer a suite of financial services that ties into the ability for suppliers to receive payments instantly through service offerings such as supply chain financing or dynamic discounting. And then finally, we have a suite of enterprise management tools to help onboard your suppliers and tap into the data that is being, all the different transactions that occur between you and your suppliers to make sure that your business is moving as agile and as efficiently as possible. And as a cloud-based platform, we also are aware of the fact that the world is increasingly mobile. Users are using tools, and that's not just their desktop. The people are on their iPhones, on their iPads, where we have a facility of tools. Tradeshift enables all mobile users to essentially work as they would as if they're in front of their desktop. And as Steve had mentioned earlier, Tradeshift also has the ability to capture paper invoices as well. And the reason is that, even though in Latin America most of the governments have mandated electronic invoicing, the cross-border invoices will still come in as paper. So with Tradeshift Cloud Scan, we have the ability to do is take in scanned or emailed invoices, convert that into an electronic format, and apply business validation rules to make sure that the invoice is indeed valid and be processed as going through your 2 and 3 matching, any type of straight-through processing that you have implemented in place. And there are a few things that are very unique about Tradeshift's Cloud Scan. First of all, it does not rely on a template to learn invoice formats. It has the ability to learn invoice formats automatically through some very intelligent machine learning and artificial intelligence capabilities. So as invoices come in, Tradeshift will automatically learn to read that invoice as if it's a human being reading that invoice. Secondly, we actually incorporate the suppliers into the proofing that invoice as well, because ultimately, no matter how good OCR technology gets, no matter how good data capture technology gets, you always need a pair of eyes to give that final okay. Now, because we intercept the receipt of these invoices, what we can do is that we can send a notification back to the supplier who sent the invoice, and then ask them to come in to sort of do that final validation. And through that step, they can also correct any business rules mismatch that we may have identified. An example of such business rule mismatch could be that a PO invoice is required but hasn't been attached, or perhaps a personal reference is needed and that hasn't been included. And it's a one-step for the supplier to make the correction and make sure that they can send the right invoice to that then can be processed. And then finally, because we have this touch point with the supplier, we see that as a first step for the supplier to begin sending invoices to you electronically, regardless of whether they're domestic or coming from abroad. And of course, to deliver all these capabilities and to suit Tradeshift for any growing enterprise, Tradeshift is extremely configurable. First of all, we can model your enterprise onto Tradeshift based on your legal entities, which different business units that currently receive invoices. And with that, what we can then do is tie different supplier groups that may invoice you, for example, suppliers that are service suppliers or suppliers that require POs, and so on and so forth, together set up business validation rules to that grouping. Because ultimately, today what we see with our customer base is that a lot of the time it's spent on tracking down, suppliers that are sending in invoices that doesn't have all the necessary business information in order for that invoice to be processed. So Tradeshift has the ability to take your invoice, match it against a list of open POs, for example, match it against your HR file to make sure that there isn't any fraud that is being attempted, and the invoice that's being received is actually a valid invoice that has the right business rules attached to it. And ultimately, again, by doing that, we ensure only clean data goes into your ERP system, and when that occurs, it speeds up the process of those invoices and removes the need for your AP staff to, correct bad data in ERP systems, the need to perhaps open back doors into an ERP system to make corrections that are difficult to correct, so on and so forth. And what we ultimately believe is that the more data, the more intelligence that you can apply in a cloud-based system that is dealing with the transport of these business documents, the more efficient your business can become. And of course, Tradeshift is global, as Steve had mentioned. I mean, we really we are a global platform, but we have excellent awareness and excellent capability from a local compliance perspective. We are headquartered in San Francisco and with a large customer base in North America. We also have a pretty large footprint in Europe, having started initially in Europe, and also our co-founders worked with the European Commission to build the cross-border procurement system within the EU. And as a result, we've taken a lot of multinationals and helped them with their local compliance within European countries. We are currently working with the Chinese government on their legislation around invoicing. In China, invoices are still predominantly paper, and Tradeshift has the ability to support paper-based electronic invoices through the use of draft invoices, where that invoice is actually validated before it's printed onto paper and then shipped to the buyer. By doing so, we can eliminate the need to do corrections in the invoices, and which then has a pretty massive sort of tax liabilities and implications when those invoices are incorrect. And we basically eliminate that from happening, prevent that from happening. And then finally, with the partnership with Invoiceware, we guaranteed compliance in Latin America through the Invoiceware partnership, and to really ensure you as a multinational can be covered regardless where you do business in the world. And then lastly, Tradeshift is extensible. At the core of Tradeshift, we are a business network that connects the buyers with suppliers. And then as a platform, we have the ability to run various types of business processes on top of that, starting with invoicing. And of course, coming along with electronic invoicing, we then extend into any type of AP processes that you may have, from purchase order distribution to supply chain financing, dynamic discounting, any type of compliance requirements that you may have. And of course, I had mentioned before, we do not only cover electronic invoicing, but we also have the ability to capture paper-based documents as well. We have a wealth of collaboration and workflow capabilities. And then furthermore, we can extend the ability to enable you to centralize your vendor management and manage your master data in the most efficient way. And then finally, the ability to install your own applications and develop your own capabilities that's needed to interact with your entire supply chain. And to sum it up, there are 4 key elements of Tradeshift Business Cloud. First of all, we connect you with all of your trading partners via one common business platform and one common interface. And the value behind that is that as program managers, as business owners that have to interact with the supply chain, you have all experienced the difficulties and resistance when it comes to rolling out a new system or a new program to your supply chain. By consolidating all of your trading partners onto one common platform, whenever you roll out a new capability, it's simply an application, an activation of a button for the new capability to be deployed into your entire supply chain. And then secondly, we can deliver business documents electronically into your ERP system. And what we really tout is that it's about cleaning all of your data into ERP as clean as possible so that your time is spent on valuable capabilities such as really your business functions rather than cleaning data and correcting that data. And with that, you can begin to automate business processes. And what we like to say at Tradeshift is that we automate the mundane, right? No one likes to focus their time around data correction. And ultimately, we should all be doing our job, delivering value back to the business. And then finally, with a platform, we can future-proof new business needs by having the ability to introduce business-specific apps that is specific to your organization. And with that, I turn it back to you, Steve.
Thank you very much. I appreciate that overview and an excellent job with that, and really showing the value and differences of what's been in the marketplace. I think in global conversations, we've seen companies talk a little bit about Europe. Many of the global e-invoicing providers have not looked at electronic invoicing. And so I think in Latin America, and so I think there's some keys there. And so just as a summary for the group, and then we'll move into the Q&A. Again, what we're looking at with what Catherine described with her vendor management, with the cloud scan for the cross-border and the paper documents, the no supplier fees is critical, especially in Latin America. Having detailed knowledge and process knowledge. This is not about a digital signature on a PDF in these countries. They're very detailed processes. They affect your taxes, your ability to recognize revenue, and your ability to do business in general. And so it can't just be a file flip. It's a process type issue. In Chile, it's actually triggered off the ASN. That's the first document starting some of the Chilean requirements. It's not even the invoice that triggers it. And then the workflow component. So the breadth of country coverage, the detailed requirements of each country, and then basically you're okay to deduct, going back to that statement, what you have to do, and then really the collaboration, what you can be doing. I think a lot of companies looked at trying to roll out, Europe and reach some saturation points. I saw that all the time in my career around electronic invoicing, where they'd get to a certain component of companies and have difficulty. And so with that, what I'd like to do is open it up to questions. And actually, Catherine, we have a question for Tradeshift. Can you describe again how a supplier can interact with the network? And so they can do XML, they can upload and cloud scan. What are the options? And do any of those carry supplier fees, or is that all free from a supplier perspective? How does that work out?
Absolutely. So we have a variety of integration channels, and so from uploading an invoice via FTP, entering that via our web interface, or direct connectivity into a accounting software or ERP system, and none of those channels have a supplier fee. Okay? So we will, regardless of how invoices are received and will actually sent through Tradeshift, we would never charge a supplier fee.
Excellent. Couple questions here, and maybe we can talk about cloud scan again. So an individual cross-border currently is paper invoice. So cloud scan would be our answer to that. And basically a supplier could email in a PDF, a document, any form of structured data, correct? And then the onus of ensuring that data is correct is on them. Can you just kind of walk through that cloud scan and how that can be used for cross-border or even countries that are not electronic, like a Peru or Venezuela?
Absolutely. So the way that cloud scan works is we will do, and there are actually two flavors, and here I'll specifically talk about the supplier validated cloud scan. There's a separate flavor that's designed for AP, for primarily paper invoices that's actually received via postal mail. But for email in invoices, what we would do is essentially direct your suppliers to email that invoice directly through Tradeshift, and it could be a custom email address that you specify, or it could be a Tradeshift email address. And on the inbound of that email, what we will do is we'll extract the invoice attachment from it, whether that's a PDF or an image. And the file itself will then go through our advanced OCR capability, which it's got a few different key steps. First of all, we transcribe the document into characters. And then what we'll do is classify and map those characters into something sensible, so invoice numbers, PO numbers, total amounts, and so on. And then what we then do is, as we basically transcribe that paper document effectively into a digital format, we'll then run that digital document against a set of business rules that you've specified. So for example, does this invoice have PO number? Does this invoice have personal reference? Are there tax IDs included in the invoice? Whatever it is that your organization requires a supplier to include on an invoice form, we can basically now check for that. And then the minute that's completed, what we'll do then is send an email back to the supplier stating that, hey, thank you for sending this invoice. We've converted it into a digital format, and we just need you to validate that invoice and before it's sent. And through that, and all the supplier will need to do is click a link. And by the way, we basically say typically this validation process takes less than a minute. They're brought to a web interface that shows the original invoice and the transcribed invoice and highlights any area that may have been omitted or may need to be corrected. And then they simply need to make any corrections if there are any, and then click submit. And so again, what we typically see is that the process takes less than a minute to do, and we've had great success both from a kind of the supplier using it and also the conversion to sending electronic invoices as well.
Excellent. I'm going to take a few questions here. There's a couple very similar. So in Mexico, the validation is required really for any invoice that has taxes on it. There's CFD, CFDI. You still have some paper, CBB. Point on that is that 98% of invoices are moving to CFDI with the new mandates of May. That'll be January 1, 2014 is when everyone has to transition over to CFDI. And so we validate the CFDs, the CFDIs. Going forward, you're going to be predominantly CFDI in Mexico. Questions around some SAP things. How does the solution compare to other third-party solutions, maybe some of the document imaging or some of the dynamic discounting portals? We view those as very niche. And when you look at the platform that we're providing here, we think an end-to-end solution has to provide collaboration, has to provide compliance, has to provide the paper scanning, and the ability not just to scan, but also assist that supplier in moving to a more electronic means. It's not just scan and stop. There's also incentives and education done through the process and onboarding to get them to transition. And so where we view those as niche, maybe one part of a puzzle, we view providing the end-to-end solution. As far as SAP goes, specifically in Latin America, we have some very unique integrations within the Latin American environment. And within SAP, we're actually native extensions for Brazil Nota Fiscal, for Mexico CFDI, for Argentina and Chile. And where SAP has weaknesses, especially from a consolidated center of excellence, kind of centralizing on SAP or running shared service in SAP, we take care of all of those configuration issues that often give the global organizations some headache on SAP support. So we do run natively in Latin America there. And then Tradeshift does have connection and interaction with SAP or Oracle or anyone else as well. Experience in shared services for companies that are looking at running Brazil back office outside of Brazil. If you have the processes well integrated, which means that you're doing the matching. In SAP speak, it's Miro Amigo, but you're doing the PO match and the good receipt match because you will always have that in Brazil, the Dan fee on the truck. You've got the service invoices coming from the cities. If you have that down, then we see the ability to run outside of Brazil as possible, and more organizations are moving that direction. And the platform we built here is specifically designed for companies that are attempting and currently pursuing an initiative of shared services outside of Brazil, taking care of the compliance, taking care of the collaboration. It's really the change management issue that comes into play in Brazil. And if you can take care of that, which we do, then you have an easier time transitioning. You'll often hear that, no, you can't transition the Brazil process into a global environment. And that's because there's so much complexity in the electronic invoicing down there. But with a provider that takes that off of your plate, you don't have to figure out updates and upgrades and government changes, then it's possible. Question on why governments are doing this in Latin America. It's two reasons. It's not really efficiency for the trading partners. We'll talk about that. But it's tax leakage. They do this in order to ensure that they get their VAT taxes. If you think about the Brazilian model, as a supplier, I register my invoice with amounts, and then I send the invoice to the buyer, and the buyer validates that same invoice. There's no opportunity for leakage. There can't, the buyer's paying off of what they validated, and so they know that what the supplier sent the government and what the supplier sent the buyer are the same. And you'll see that continue to move. Similar in excise management. It's not like this hasn't moved into other parts of the world. It has in Europe through the form of EMCS. We'll see if the governments start to take a stronger stand, but Latin America is by far the leader in all of this. And then lastly, for those that joined late, we will make the presentation available. We'll be following up with you with any questions. You'll also get an automatic email after the session is done. And with that, feel free to respond back with any questions as well. It'll come back to myself and Catherine at Tradeshift, and we'll be able to answer any of those. But we'll also be following up in the next few days to see if there are any questions and really talking specifically about your situation. We've learned a lot of lessons from companies that are our customer base, from Coca-Cola to Kellogg's to DuPont. To DSM, to DHL, et cetera, out there. Multinationals that are dealing with the same problems you are. Be happy to share our experiences and what we're doing to help companies with some very specific problems. So I want to thank you for your time. Catherine, thank you so much for your time today. With that, that'll conclude the presentation, and look forward to speaking with all of you soon.